Hey, good afternoon, everybody. Thanks for joining us today. Rob's going to go through the market charts. Having some weird action here this morning. It's weak. We were trying to look for a bounce play earlier and got chopped onto one. I missed the other one that just bounced here. But this market's a little bit strange. They're playing some games with it, pushing it up and then selling it off again. We've noticed it could be some of the algos kicking in. I'll get Rob to get started up here. Like he normally does. If you have any chart requests, just type them out, and he'll go through the charts. I really want to give credit to Rob. He's been right on with his chart reading abilities on the market, and we were discussing it earlier in the chat. Just the time that he felt uncomfortable with the market is actually after we started to fade back. Initially, he loved the action on the way up and kept saying that we're on that trend up, and you could. If you go back through the webinars, you can actually see when he started to think that we were getting unstable and getting a bit toppy and to be more cautious. So great job, Rob, by the way. Go ahead.
All right. Well, thank you, Frank. Good afternoon, everyone. I am Rob, Stock Darts. The silky smooth voice you just heard was Stock Guy 22, also known as Frank. And yeah, we've been... hopefully, we have a lot of regulars here, and hopefully you guys have been able to take advantage of our read on the markets. I hope I did a good job of warning you guys about some of the weakness I anticipated coming into October. I did not anticipate the weakness to be as strong as it's been, but I did anticipate us to have a pretty strong correction into October, and that has been the case. Before that, obviously, throughout the year, I thought we had a good chance of rallying strongly. And you know, like I said, when we have these Wednesday webinars, we cover the four major markets, right? We cover the S&P 500, the NASDAQ, the Dow Jones, and the Russell 2000. And a lot of times it's not necessarily to trade those four indices. It's to give you guys a picture of what the market environment is like so we can find trades that work depending on how the market's behaving. So hopefully that helps you guys out. That being said, you can find if you like the information you're getting here, if you're happy with what we've given you, you can look for more at Stock Darts on Twitter or at StockGuy22 on Twitter. Same names on YouTube, or you can go to my patreon.com/StockDarts page, and you can find more trading ideas from me there. Some of it's free, some of it is with a minimum subscription of like $8 a month, which is pretty easy for anyone that's trading to afford. And then there's some higher packages, some higher end stuff if you're into trading options or cryptocurrencies. And you know, I try to offer as much as I can to help traders out. A lot of it is free. A lot of it is very cheap because I understand a lot of traders that are in looking for advice don't have a lot of money to spend in the first place. So I like to try to give you guys as much as I can and to try to help traders really become profitable and to really try to be able to survive markets like this. I think anyone that had the right plan and the right strategy in place should have been able to navigate through October without really getting hit too hard. Unless you really, you know, maybe your retirement accounts are going to get hit because you can't be that nimble with those. But your trading accounts, we should have been pretty well positioned to not take a big hit in October. As a matter of fact, Frank and I both. Frank had the best month of his life in October, and I had a very good month as well. And a lot of that was due to the fact that we saw what was coming and we knew how to kind of position ourselves. And then, particularly with Frank with the day trading, that volatility really makes it a much better game for him as far as trading is concerned, because he can go ahead and take advantage of that. And I think that's what you guys need to do is, when you anticipate markets of difficulty, you have to find different ways to take advantage of those market conditions rather than just sort of staying stuck in the same rut of just trying to take everything long, and just buying names and holding and hoping that things work in your favor. So that being said, and that being out of the way, let's go ahead and take a look at the markets. As usual, we're going to take a look at the four major market indices, and then we will look at oil, gold, silver. Oil has had a tremendously bad month. And when we finish with that, we will move on to the chart requests. I see, Denise, you want to look at NVIDIA. We will certainly look at NVIDIA when we get to that point in the webinar. But let's look at SPY first, right? And unfortunately, we got cut off last week, right? I was basically in the beginning of discussing the markets, and then Comcast decided that they wanted to work on my internet at exactly 12:40 or whatever, and we didn't get to really finish our thoughts on the market. But I believe when we got cut off, I was mentioning how we were at a pretty good level of resistance and that there was a strong possibility that we would sort of stall out at that level. And that is what has occurred so far. Just to kind of backtrack, we topped out in October, and we had a pretty big swoop down all the way almost to the year's lows, right? We came down to 259, basically 260, just a few points off of the year's low. We were able to sort of stabilize and print a nice bottom, which hopefully will hold for the year. I think there's a decent chance that we printed a bottom for the year, despite how ugly it looks right now. It looks like we want to head right back and retest it. I don't think that's the case, though. I think that we probably will form a new pivot slightly above the lows that we printed in October. So I think that despite how ugly things look today, that we're not really ready to print new lows. I think that we will try to find some reversal points in the very near future. But once we did bottom out, we sort of surged right back up to some really strong resistance levels. And I think if you look across the board, other than the Dow Jones, which actually was able to make a very impressive strides through some resistance levels, most of the other major indices kind of came right back up to the textbook levels where you'd look at a short. And again, for those of you that are regulars, you know I've been, over the last 3, 4, 5 years, I've been basically only a long-only trader, right? Because that's really all the market has been giving us. And trying to short this market and trying to take short trades during this market has sort of been an exercise of futility. That being said, though, things have changed. And for those of you that are on my Patreon page or visit the Patreon page regularly, you'll know that I posted some short ideas on Monday, I believe. And 3 of the 4 have worked out very well so far. And, you know, it's just to point out that things have changed. We're not in the same environment as what we've seen throughout the year. If you take a look at this chart right here, and we'll just zoom back a little bit and just, here's basically 2018, right? All of the price action for 2018. And you can see we spent a good portion of the year in a very steady trend, climbing basically to new highs. And that has changed. We're right back in a very similar environment to how we started the year. And this sort of volatility, I think more than anything, lends itself to us trading in a very neutral range with a wide sort of range of possibilities. I think that we are right back to where we started the year, which was transitioning towards a broad correctional range, very similar to what we saw in 2015 to 2017. Now, ultimately, that could be a market top, or it could be a base, similar to what we saw in 2015, 2016, where we sort of build up and then eventually come back to highs and try to push past it, right? I'm not ready to say that this is the end of our bull market. And again, the bull market that has lasted for quite a few years now. We go back to a monthly chart and look all the way back in 2009. Look at where we've come from in the last almost a decade now. And you can see we've gone almost uninterrupted in a straight pattern, or in a straight line, from 68 to 70 all the way up to 280, 290, right? So we've been in a very historic bull market. If you have struggled during this time, then you might want to look at what you're doing, because this is really the kind of market that erases a lot of mistakes and makes trading easy. Now, of course, there have been pockets of toughness, right? Anyone that was trading regularly in 2015, 2016, and 17, even though it looks like a blip in the radar on the monthly chart, that was actually a tough couple of years for traders that trade in a directional sense. And this year has been tough on traders for the most part, just based off of how we've sort of gone back and forth, and a lot of times not giving traders a chance to get into some of the longer trends. But overall, we've been in a pretty good market, a pretty benign market. And I think we're reaching one of these transition phases where this could ultimately be a market top, or like I said, it could just be another one of these blips in the radar in one of these more, one of these big secular bull markets that last a couple decades. So I think overall, it's early to say that it's the end of the bull run, but I think we're seeing warning signs and warning signals now that tell us that this market is not in the same place that it was throughout this year, and definitely throughout the last couple of years. And because of that, I think that we're safe now in taking some short trades, taking some directionless plays where we just take advantage of a broad market sort of correctional state, and try not to just get stuck trading momentum to the upside. I think trading momentum to the upside is not the idea right now. We want to be looking at either reversals at strong support, or looking at maybe even taking shorts on names that get a little ahead of themselves and move up to strong resistance, right? So, like I said, the S&P 500, you can see we came right up to a pretty critical level of resistance around 280. That was a nice horizontal level on the chart. You can see it was. Now, we've had price action above it, obviously, right? We broke above it early in the year, then we kind of came back. But you can see it was a key level where we really reversed in March. And then it was the nice point where we actually transitioned from being stuck at it to breaking above it and holding as support, right? And so you can see it held as support throughout the summer. And then when we broke down, this was where we tried to rebound and then eventually really cratered back to new lows, was right at 280. So 280 was a pretty key level, and I was expecting us to have some trouble and to struggle at that level. And so far that has played out. We've come right back below the 200, right back below the 20. We're below all three major moving averages, and now the key point is, where can we look for some support? Where can we find a spot for this market to sort of stabilize? And we're actually at it, and that is this 270 area. Now, that's a key area, right? Again, if we just look back to where we started the year, that's right where we opened the year, right? These ads. We started the year right around 270 on the S&P 500, right? Right before we just ripped to just this huge short squeeze up to all the way up to 286, right? And that has been a key level. Now, granted, price action has zigzagged quite a bit through it, but it has been a key reference point throughout that time. And matter of fact, served as the launching point for the rally to really start to get strong in the beginning of summer, end of spring, right? And so we're right back to that level. That's a key level. I think that there's a decent chance that this is where we should pivot and where we should find some support. Now, it doesn't look like it today. And if we lose that level, well, then I think we're going to head back down quite a bit lower. But I suspect that this is where we should find some support, where we should print a hammer, maybe tomorrow, maybe Friday, somewhere in this level. And maybe we dip a little bit below it, but kind of come back up and try to close back above this 270 area. So that's a key level to look for. What I'm looking for is for us to find a nice reversal pattern here, maybe a hammer, maybe a bullish engulfing. And then from there, we can maybe take a look at the market, maybe trying to get back up to 280. Now, if we roll over here, if we close really weak and open weak tomorrow, well, then there's a pretty good chance that we're heading back down to this 265 to 263 area, at which point I suspect that we hold. I don't think that we're ready to kind of come down and retest new lows, which is just below 260. I think that if we can't hold here, then we're probably going to attempt to hold in the mid 260s, the 263, 264, 265 area, and that wouldn't be that great, because that would put us below the year. Again, we'd be negative on the year, and that would make this a pretty critical level of resistance that would give the market more trouble. It didn't give us trouble right now because it was the first test of it. But if we fade this move back above it and come right back below it, then it's going to become a pretty critical level of resistance, and that means that we could end up the year negative. Now, if we can hold here, like I said, then I think this sets up well for us to sort of maybe drift higher into the next couple of weeks, into Thanksgiving, and then as we start to approach Christmas, and we can maybe not come back all the way to highs. I think at this point, a move to highs is probably a bit optimistic, but sort of stabilize and stay in the middle of our range and not sort of end the year at the lows, right? So again, if we just take a look at what we've done this year, which is basically trade sideways now that we really look at it, despite the fact that there was a major trend in the middle of it, we've basically traded sideways. Right? So that's the year in a nutshell. Just a big white box. And the problem is, if we close the year like this, especially if we close the year down here, that's not good. That means we probably roll over to start the new year and head even lower. What we want to do is close the year somewhere in here, right? Maybe even make our way up to about 288 to 290. And if that's the case, and we have a nice just sort of a Christmas rally, and possibly make our way back up, then it gives us room and a little bit of cushion to the downside in case we open the year poorly next year, and gives us room to kind of go back and forth and to continue to explore this broad range between about 285 to 290 and 259 to 260. And I think at this point, that's what we kind of have to hope for, is that we just sort of stay in this range and just sort of trade sideways rather than roll over and start to test new lows. If we start to test new lows into the new year, that's a really bad sign, because that means that we were very weak during what is traditionally the most bullish point of the year cyclically for the stock market, which is the holiday season. That's typically when the market sort of has its best rallies. And if we are pushing lows during that time, that doesn't set up well for next year. And that would be a good warning signal that maybe we are ready to sort of call it a day with this bull market and start to retrace it in the longer term. Now, again, long way to go before really we are in a lot of trouble. But if we have to come back and retrace this 250, 230 area on the long term, then it's something that probably will happen at some point. Whether it happens in the next few months or whether it happens in the next 2 or 3 years, there's a decent chance that we need to kind of come back and retest some of this zone, right? The stock market doesn't just go up in a straight line for decades on end without ever retracing and without ever coming back and testing some prior areas. And unfortunately, it doesn't look like a lot on the monthly chart, but on the weekly and on the daily, those are big levels of big swings of volatility that could really hurt people's trading accounts. So you want to be careful about that. You want to sort of respect and understand what your risk management guidelines are. But I do want to point out that even if we do crash and head down to 250 to 230, in the long term, we're still sort of in this big secular bull market, and we're still really not in that bad of a state in the long term. But in the short to intermediate term, that could be pretty ugly. So you have to make sure that you understand where we are and what your plan of attack is, depending on where we go from here. That being said, I think from here to next week, we should find some stability and some support around the 270 area, and hopefully we print a hammer tomorrow. Like I said, today's candle doesn't look that great, but maybe we sort of run up into the close and print a little bit of a wick, and then we can maybe work on it tomorrow and build off of that and start to make our way back up and retest the 280 as we head into Thanksgiving. If we close below these all these wicks here, right? What is this? 270, and then basically 270. This whole little area here. If we close below that, then I think we might need to head lower. It all depends on how we open tomorrow. But basically, keep an eye on this price point, right? And if price action can stabilize and hold above it, then I think we have a nice chance of bouncing and getting a nice 3, 4, 5, even all the way up to 10-point bounce on the S&P 500. If we're below that, then I think you need to be even more cautious than you've been. And hopefully you've been kind of cautious recently. All right, now, I know we spent a little bit of extra time on the S&P 500, but I feel like that's the best gauge of the market overall, is to look at the SPY. Let's take a look at what the tech sector is doing with the Qs. And again, pretty weak. Textbook failure at a previous support level that turned into resistance. This ascending trend line, the 200-period moving average. You can see we sort of bottomed out, and we came back up, and we filled exactly where we were supposed to. Now, there was a very optimistic candle. What was that on the 7th, which was last Wednesday, as a matter of fact. And that looked pretty good, right? Because we got back above that trend line, but we ultimately failed there and kind of came right back down. And this is actually kind of negative, and this is actually, relatively speaking, much weaker than what we're seeing in the S&P 500, because we've lost that point, that 270 area on the S&P 500, which kind of coincides with the wick that we formed in October. We've passed that on the Qs, right? We're actually below that. And I was looking through a lot of the big tech names over the last couple of days as I sit here and try to figure out some trades to put on the Patreon page. And as I was going through, I was like, well, maybe it's time to look at Apple, Facebook, Google, and see what's going on. And it's not. It's definitely not time to look at these guys yet. If you take a look at Apple, that is a really negative chart. If you take a look at Facebook, that is not quite as bad, but only because they're already at lows. Google, again, trying to sort of stabilize at lows, but not good. And Amazon also, I mean, not quite as bad, but not really looking that great either. They did the same thing as the market, where they stabilized and came up, and then they sort of failed at a pretty critical level and are still in the process of just trying to stabilize and sort of stop this correction that is sort of taking them by full force here. Even if we look at Netflix, not really looking that great. Again, below pretty key support levels, and again failed as it came up to retest that. So overall, all the FANG stocks are not doing well, and that usually does not bode well for the markets in general, right? So that is another hint or another warning that maybe the market's not really ready to kind of come back up and start trading back to highs, right? And I think everyone kind of agrees at this point. I'm pretty sure a lot of you guys that are here are not looking to see if I tell you the market's going to highs. You're probably looking at me and saying, please tell me this market's not going to any lows. And the truth of the matter is that while the S&P 500 looks like it's stable, the NASDAQ looks like it wants to head back to test the lows, right? It already lost this 167 level and looks like it wants to come back up and test the year open price, which is way down here. Now, one thing I do want to point out is S&P 500, this level coincides with the year's open, right? So we're already there. So in the longer term, the S&P 500 is relatively weak because we're testing that level now. Because the NASDAQ was relatively strong earlier in the year, it still has to come back and retest that level. So I can see where the S&P 500 tries to stabilize at its current levels, and the NASDAQ maybe needs to come back and try to stabilize a little bit lower and just try to stay break even for the year as well. So there is room to the downside. These tech names do not look like they're ready to bounce. But we'll see what happens here. We'll see if maybe it tries to stabilize here and tries to print a hammer and try to get back above this 167 area, which in the short term is kind of not a major level to keep our eye on, but this is a significant short-term level that we're kind of losing here, which leads to price action probably coming back all the way to 163. Ideally, we don't make it all the way to 163. We stabilize here, and we try to make our way back up. And that would coincide with the S&P 500 stabilizing at that 270 level. Other than that, I don't think there's that much more to add to the Qs that doesn't really match what we just mentioned with the S&P 500. For the most part, the rest of the analysis is all the same. It's just the relative levels are different. But overall, it's the same sort of idea that what we want right now is to explore this area between 178 and 170, but we're below that now. But we want to sort of spend the next couple of months in this area rather than down here in the 160s and lower, maybe even the 155 area. We don't want to spend the year down there. That would not bode well, and that would probably lead towards further correction into the start of new year. Just buy gold. Sure, Ray. That is... it's funny. We're going to talk a little bit about gold today because I saw some articles saying that some banks are starting to recommend gold, but I don't think that's a good idea right now. And I know you've been stuck in gold for a long time now, but yeah, we'll get to that shortly. All right. Next up is the Dow Jones. Now, the Dow Jones, as tends to happen when the market is in trouble, the Dow Jones tends to outperform slightly because it has, for the most part, names that people consider to be safe, right? And you can see last Wednesday it had a huge breakout and actually got back above this green trend line, which is pretty surprising to me, or pretty impressive, because again, that is the trend that is held in place. While most of the markets have traded in a nice sideways range throughout the year, and the Dow Jones has too, but the Dow Jones, for the most part, has maintained an upwards trend throughout the year. Despite the fact that it's kind of like it was playing two games at once, right? It was trading sideways and trading up at the same time. Nice little magic trick that the Dow Jones had this year. And I think right now it's still within the process of sort of finally breaking this downtrend and graduating to sideways like the rest of the indices did. But you can see it's still struggling. It's still fighting with its identity. It's like, no, I'm in a bull trend. I'm not gonna trade sideways like these other clowns. I think I'm good enough to keep going up, and that's what it tried to do last week. And it was ultimately met with a pretty big wall of selling. Right? You can see it faded very quickly and kind of came back down. It's above the 200, and it's above the year's opening range, which is right around 250. So, relatively speaking, again, still sort of strong compared to the S&P 500 and the Qs in that it's above the year's open, and it's actually above this pivot which basically coincides with the year's open. You can see in October, the first time that we came down, the Dow Jones ended up stopping right around 249, and we haven't really come back down to that level. So again, this sort of lines itself up pretty well with this idea that we should bounce in the next couple of days and we should find a stable bottom. So the Nasdaq does not look that way, but the Dow Jones and the S&P 500 do. And so again, it looks like this is a good spot maybe to look at the markets to stabilize, and hopefully we could find a little bit of a relief here and maybe run up in the next couple of weeks as we explore this big fade that we just had over the last week. Since last Wednesday, basically, it's been straight down. And I think maybe we've reached a point where we can maybe stabilize and start to look for a decent level to sort of find some support and see if some names can find a way to start making their way upwards. Yes, Mike, Frank is still mostly trading futures. I imagine if we continue to correct in the markets, that he's going to start salivating and start looking at maybe start looking at buying some values as names start to dip down. Things like Apple, Facebook, Amazon, they're starting to reach levels where maybe they finally entice Frank to start trading some stocks again. But he's doing so good with futures that I don't, there's no reason for him not to continue with it. He had just yesterday he made like 18 grand on one trade. Like he said, October was one of basically his best month ever. So he's still focusing on futures. It's treating him very well, but we'll see. We'll see if the markets continue to correct if he gets enticed into buying some longer term holds again or some bigger swing trades. All right. Last up, let's look at IWM. Now, small caps. Now, very similar to the Qs. We are, relatively speaking, weak, right? So here's the opening range, and we're well below it. So unlike the other indices, we're actually below it. We're below that pivot from early October, right, which is down here at 150, and looks like we want to head down and test lows. So I think this is a pretty common theme in markets. When you have a corrective market in nature, when you have big sell-offs, the riskier assets, which is traditionally the small caps and the tech names, are underperforming because traders are gravitating towards safer names, and the first things they want to get rid of are the more volatile, risky assets that they're taking bigger hits on, which tends to be tech names or small caps, right? So nothing out of the ordinary here. This is what we would normally expect to see in a market that's correcting in nature. And that's where we stand. We lost the 20 period. We're way below the 50 and the 200. We never even came close to retesting this 160 level. You can see even on the last couple of bounces, while the other indices came up and bumped their heads against pretty key levels, IWM didn't even reach those levels, right? We never even reached 160. We just sort of bounced. We didn't even reach this other pivot at 158, which was already short of the 160 from before. So overall, traders have no faith in IWM and no faith in small caps right now. We're in a steady downtrend and we are not stabilizing. So if you're trying to find names to trade and you're trading to the long side, well, then you should be looking at Dow Jones names or maybe some of the safer names in the S&P 500, maybe stuff like utilities, names that aren't going to have a lot of volatility. If you are looking at taking advantage of market volatility, whether it's through options or whether it's through shorting names, maybe you want to look at some small caps or some tech names, particularly the ones that are bumping up into resistance rather than the ones that are lows. You don't need to necessarily short names that are already at new lows. And I think that's how we have to approach this market right now. If you look at the small caps, if you look at the Nasdaq, it gives us a picture of a market that wants to head lower. If you look at the Dow Jones and the Dow Jones and the S&P 500, it looks like a market that wants to stabilize, right? So it's a little bit of a mixed bag, and we could probably just call it in the middle and say that we're going to threaten lower, but hopefully stabilize from here to next Wednesday, and try to sort of stabilize around the year's break-even point on all four of the major indices, right? All four of them are pretty close to it, and I doubt we want to see the year close as a negative. So ideally, we can sort of continue to hover around that level and try to get back above it on the four major markets, depending on which one we're talking about, what we're looking at. So that's the overall market environment. I would say it's definitely not that positive. Much more negative than what we were expecting throughout the year. Even though I expected a lot of market weakness in October, the market is still more negative and more weak than I expected it in November. I thought that prior to October, I thought there was a decent chance that we'd correct, but that it would set up for a nice rally as we sort of, made our way off of that correction. However, that correction ended up being stronger and longer lasting. And at this point, I think it's done a lot of technical damage. And because of that, I am definitely being a little bit more open-minded to trading in a different environment, one that's expected to go down more than up, and one that's expected worst case or best case scenario to go sideways. And so that's what I'm kind of focusing on now. I'm still trading pretty lightly. Again, if you just, any of you guys, you just go onto the Patreon page, and for the most part, most of the trades that I'm looking at, I just post on there. There will be some trades that I'll take that maybe I won't mention, but usually if I take that, I don't really tell anyone whether it's good or bad. Just some names that I think people maybe shouldn't be following me on. But for the most part, the ideas and trades that I'm looking at are usually posted on there. So you have a general idea of my activity level just based off what I'm looking at and what I'm putting on there, and even by the nature of what I say. So for instance, yesterday we were looking at a possible trade, and it ended up not working out, right? But it never triggered. And so I didn't even bother. It's not a trade that I took, but just judging by the language that I put on there, you could tell that I wasn't impressed with the market, right? I was looking around, and the best I could find was a name to just put on a watch list. It wasn't even a name to trade. It was a name that I was like, you know what, we're just going to put this on the watch list and move on, right? And if it can break out, great. If it doesn't, if it pulls back, then it'll pull back. And for the life of me, I'm drawing a blank, and I can't remember the name. It was Zoetis, right? So I was looking at Zoetis, and again, it looked good, but it wasn't ready to move, right? And so what I did was I just said I'll wait, and if it could break outside of this consolidation range, then we take it. If it doesn't, then I'm out. And I think that sort of encapsulates what you should be doing right now with the market. Yeah, Mike, I'm getting old like the rest of. Yep, the memory's going. No, but honestly, like at this point in the market, you need to be picky, right? So I find a name that I like, but it wasn't ready. There wasn't any long names that were palatable yesterday. There was nothing. There was zero long names that I found that I wanted to take that were actionable at the moment. So the best I could find was a name to put on my watch list, which I did. It didn't work out. All that's been working right now are stuff like this, which was the shorts that I posted last week, right? You've got this short on the NASDAQ, which is working out wonderfully and doing very, very well for us, which I posted twice because I liked it so much. We've got ERJ, which again has done a really good job. Actually moved down pretty quickly and gave us pretty quick profits. And then we have FRAC, which is doing awesome and looks like it wants to head down to lows. And again, we've already scaled out on a bit of this. So the short trades are working well, right? But the long names are not. But when the short trades are working well, that's when you want to look at some long names as they set up for their bounce, and you want to be in tune with how the market goes back and forth. But overall, I think with the market that we're in right now, we need to be cautious and we need to be very picky about what we want to trade. We don't want to just sort of jump into a bunch of names and try to just trade to trade. We want to make sure that we are being extra picky because there's not a lot that's working right now, and it's a lot more difficult to find trades that are really going to work in our favor. All right, so that being said, let's go ahead and take a quick look at the U.S. dollar, oil, gold, and silver, and then we will look at chart requests. Here's the U.S. dollar, strong. It's been very strong now for the last month, and continues. This is the UUP index, which again is an aggregate of the U.S. crosses, but for the most part, it's a mirror of the euro. So if we look at the euro, we'll see that the euro has really struggled versus the U.S. dollar, and it's basically made new lows. This is major levels on long-term charts. This 114 was a very critical level. that I expected more price action in the middle of or basically the middle of last year, beginning of this year. I expected more price action here, and we just kind of blew through it. But we're right back to it and retesting, and we're sort of zigzagging back underneath it. Overall, that's a pretty major breakdown for the euro, which bodes well for the U.S. dollar. If we look at the U.S. dollar versus the Canadian, it also has done very well and has done a nice job of breaking out. This is a trade that we've looked at quite a bit in our Wednesday webinars and continues to act well as it sort of broke through this 131 and more importantly, as it broke through this descending channel. And even the U.S. versus the yen has done excuse me, a great job of also stabilizing and basically trading right back to the top of this range. I don't think there's a lot of upside left on the yen, and to tell you the truth, even on a couple of the other ones. But for the most part, this gives you a bullish picture of the U.S. dollar. So what does that mean? If the U.S. dollar is this strong, gold doing well today. Nice little green candle, but look where it's at. Look where it's at in the long term. A lot of trouble, right? Silver, even worse in the long term. Basically at lows, desperately trying to hold at lows. And so overall, I'm not a fan, right? I mean, you can see this as a value play, right? They're at lows, but they're not really. I mean, they're not even holding at support, really. Like even silver, if you really think about it, has been trying to bounce, right? For the most part, right? You can see it came down here and then it sort of started climbing its way higher, and it broke all that and it's back at lows, right? So I'm not ready to get behind gold and silver. Ray, I'm sorry for you to I'm sorry to be the bearer of bad news on this. I don't know that these are ready for anything strong, right? I think gold, even if it does rally here, you can see it failed pretty strongly at the GLD at the 115, 116, 117 area. And I think there's a lot of work to be done. That being said, GLD, relatively speaking to SLV, does look a little bit better. They at least stabilized and sort of made their way back up and are trying to establish a higher price action as they sort of climb. But for the most part, we're just basing out at lows on both of these and not really doing anything great. In order for these to do better, we're going to have to see a major reversal on UUP and a major reversal on the US dollar. We're going to have to see price action just basically come all the way back down through the moving averages and back down to this 25, 24 on the UUP index, which is a long way from now. It could happen, but we're still a long way from that. And then finally, oil. And oil has been a disaster. I'm honestly shocked at this. I expected oil to pull back a bit, but to stabilize at 65, 64, I wasn't ready for this. This actually blindsided me. Not that I traded it, but I didn't expect this. This is actually much lower than expected. I don't mind it, right? Cheaper gas. We don't have to worry too much about rising energy costs, which was a concern of mine. And funny enough, I thought rising energy and rising oil would have been one of the big problems we'd face with the market. And that obviously is not the case at the moment. It's just really ugly right here. Now, that being said, we are right back to a major level here. These things are persistent today. We're right back to a major level, a major range. So I expect oil to stabilize here, 53, 54, and to find some support there. You can see we have a nice bullish piercing candle so far today. And I expect oil to find a bottom here, but I wouldn't be ready to trade it yet. You don't want to trade off one candle, and you don't want to trade just because it's a level. But I'd expect some sort of bottoming formation to form at this level. And that being said, I think with the U.S. dollar, I'd expect some sort of topping formation or some sort of stalling out at its current levels as well. So we'll see if all of those coincide well together or not. And other than that, that is what we're seeing here. And again, I'm not that excited about these guys, just like I'm not that excited about the stock market. And to tell you the truth, I'm not too excited about the cryptocurrency market as well, which is also having a negative day as well. You can see Bitcoin today is starting to resolve from a triangle and in the wrong direction. So I'd say in general, we're not in a good place in the market where there's a lot to really trade. And so we want to be careful, and we want to go ahead and maybe take advantage of downside or take advantage of premium. The one thing I can say that we do want to take advantage in this market is volatility. The best way to take advantage of volatility is either with day trades or with options. And that's really my focus right now, is looking for ways to take advantage of some of this volatility that's coming into a lot of different names. All right, so that's a good segue into Denise's question, because it's regarding covered calls. Okay, can we look at NVIDIA? You have long stock positions and covered calls. You're down in the position right now, as would be expected with where we are. Okay, so my question to you, Denise, is the first question. The fact that you have this as a covered call is sort of implies that you're probably in this for a longer term period, right? So I don't know how long or what your goal is on this, but what is your average cost basis right now? And if you're in it for the long term, are you in a position where you want to add, or are you in a position where you're already at a max size? Okay. So here's my thing. Typically with a covered call position, I like to start at a pretty small position and then work my way to max. If you're already at max size, then there's not a lot we can do, right? Because you can't sort of lower your cost basis by selling puts here. If we look at what NVIDIA has done, it actually lost a pretty key level here at 215, and there isn't a real obvious support. When a name is this strong, there's never any real obvious levels, right? I mean, we can go ahead and do a fib retracement, but I think that'd be a little absurd to do a fib retracement that's 3 years long. Even if we did one from here, it's just kind of a long-term thing. So we're just going to kind of go off of what it's done recently and sort of get an idea here. And all right, so here's a better picture of what's happened, right? It's been very volatile. Yeah, of course. And I think the tech names in general, they've done so well that it was only a matter of time before eventually volatility came in. And so we're at a spot here now where I think it's trying to bottom out, right? We have a potential double bottom forming here. If it can get back above 218, then that's ideal. And because you're at max size, we can't sell puts, right? To me, a name like this is a good time to sell puts because we're having such huge volatility. We have a big down day. We already had a big down day before, and I think we could probably get some good premium on maybe even like a 180 put. But that's not really a question for you, so we're not going to bother with that. So the next thing to do is to just sort of figure out where we want to go with this and where you want to stop out, right? So what we have here is a nice attempt at a bottom, and there are two ways of doing this. If you want to be aggressive, you draw a trend line like this and you say it's forming a triangle. If it breaks to the downside of this triangle, then you really have to just say goodbye, NVIDIA. I don't want to keep holding you. And if it could break to the upside, then you're still in the trade, and you could wait for new levels to sell more covered calls. Now, again, I'm assuming you already have it covered with calls. So we can't even really sell calls right now. But if you were really worried about the position, on a green day, if we get back to 210, then I would maybe sell 220 calls. And then try to work my cost basis down with calls. And if it goes above it, then fine. But ideally, you want to sell calls in these two areas right now. You want to sell calls here, around 219, 220, and then eventually this 250, this 245, 250 area. And those would be the two areas that I'd be worrying or looking at right now. as far as where I'd want to be collecting call premium. So you have a covered call expiring this Friday on it. Okay, so hopefully what could happen for you here is that it bounces. And again, looking at the market and looking at what I'm seeing, there's a decent chance the market bounces over the next couple of days. And if so, hopefully NVIDIA could bounce back up to the 205, 207, 210 range. And then from there, you could look at maybe closing out that call on Friday or taking the profit and then re-upping it for next week or for the next couple of weeks around the 220 level. And then that way you can sort of lower your cost basis a few bucks at a time, so that if it does break down, you'll be okay with it because you've covered it. You've sort of made some backup. Yeah, no, typically, well, let's face it, your covered calls are always going to be a profit on these down days, right? You're always going to make money on those. The question is it enough premium to offset what the stock is down, right? So I think that's where we want to work, is to make sure that we get to the point. I don't know what your entry was. I'm assuming it's probably way up here, and so you've got a lot of work to do on this. And that's one of the reasons with these types of trades that I like to start small. Let's say, for instance, you want now again, if you're trading only 100 shares and you can't go above it, then you don't have a chance. But typically, I don't like to sell covered calls on trades where I'm not going to look at least 400 shares, so that I know I could go in for 100 and then sell puts on another 100 and then maybe even on another 100 if it continues to go down. That way, I could average in at a good price. And I know people say averaging in is a terrible idea, and it's a way to go negative in the markets in general. But if it's part of a plan, there's nothing wrong with averaging in and cost basing, averaging down. The problem is when traders don't want to admit they're wrong, and they average down on positions that are way bigger than they should. And so you have 500, so I can understand where you don't want to add more. 500 shares on a $200 name that's a pretty, that's a nice position. That's a big position. So I can see where you already don't really want to add more. And you have staggered covered calls and you have staggered buys. So you've already been working through that, and you just, you've reached the breaking point where you're like, I've had enough of this, which is fine. And again, so I would do this. Either you could do the triangle, or if you want to be a little bit more lenient on it, you could just say if it loses this price action around 185. I probably wouldn't use the wick, because if we lose 185, we're probably going to come down and retest the wick anyway. So maybe something like this would be the other way of looking at it. But you basically want it. You don't want it to lose this little clump of price action. If it does, then you probably just have to cut the cord. Even though there's a good chance that you'll be faked out and it'll maybe bounce and come back up. But you don't want it to lose this price range, right? It's trying to stabilize, it's trying to bounce, and you just want to keep working those covered calls in this range until it could break past it and get up to the higher area, okay? So I hope that helps. I know this is, there's really unfortunately not that much you could do on this because you've already kind of gotten to max position. James, you want to look at BZUN, right? All right, BZUN. All right. So now here's a question, James. Is this something you want to look at for a potential long trade, or like Denise, is this something you're already in and you're trying to figure out how to manage the position? I would say at the moment this is looking bearish, and I don't think I'd be ready to go long yet. But I'm not sure what you're looking for on this. But let me just point out what I'm seeing here. One, this is not a good pattern. This little ice cream sandwich that we got here, two big red candles with a green one in the middle. It's showing that there's still a lot of selling. We had a nice bullish candle yesterday that maybe looked like it was going to bottom out after that big gap down, but today it's been completely negated by another bearish engulfing candle. Let's look at the weekly chart. And okay, so I can see maybe this is a name. And you know what, Ray, by the way, we're going to look at another name that I know you haven't asked in a while because it's doing bad now. But we're going to look at another name that maybe you want to look at as far as names that I'm assuming, James, that what you're looking at here is a name that has been strong and it's finally weak, so you want to know when you can get in, right? Because it's a name that probably you wanted to get in for a while, but it just continues to go up and go up and go up and never gave you a chance to get in. And it's finally looking like it wants to give a chance, right? So I'm assuming that's your MO. Let me know if that's the case. Yes, go long when it's ready. Yes. Okay, so, all right. So now, looking at the weekly chart, we have some major levels here, and it actually lost a pretty key level here. And that is a level that used to be resistance that should have turned into support, and it did, but it lost it, right? But that being said, we've gapped down, and we are towards the middle of this base now, right? It formed a nice little base, right? It had a nice little ascending triangle base, something like that. And we're in the middle of that right now, right? So we're kind of playing the watching game with this. I do think that this is the kind of name that if you really like this name and you want to play it to the long side, you want to be watching now, but I don't think it's ready to buy yet. A reason for that, of course, is we had a pretty steady channel, and we lost that channel, right? For the most part, you can see we were pulling back, and up to the last 3 days, this was textbook, right? You have a base, you break out, you continue, and then eventually you come back and retest that base, and as long as you've confirmed support above that base, you're good. And then you expect it to eventually break above this channel and start making its way higher. However, with the gap down and the price action of the last 3 days, we have a failure established to sort of maintain that breakout above that price range. So right back smack in the middle of that range, which means there is potential for a move all the way back down to 26. Now, not saying it's going to get to 26, but there is potential for that. There's also potential for us to come back up to 37 and ultimately fail and then head back down. So at the moment, there's a lot of question marks. Now, that being said, you might still want to be interested in it. And so I'd say there's a couple of different ways of looking at this. The first is the most cautious play, which is to just wait for it to come over here. That's still months away probably, right? But what you want is you want it to be above 37 and you want it to be beyond this descending channel. That would be the play where you're like, you know what, I'm not going to buy this till I know it's ready to move forward, and I'm happy with it. And you'd have to wait quite a bit for that to happen. The next scenario we could look at is where you want to be cautious, but the other way. You want to buy it at support, right? In which case, you want to wait for it down here. And you want to wait for a reversal pattern down in this level. And then the last one is not really an option right now, but you'd want to see a reversal pattern somewhere in here. It'd have to be a pretty convincing reversal pattern, and I don't think what we're seeing is enough yet. You'd want to see some kind of a, maybe, let's get rid of this, and you'd want to see maybe something like this, where you can play it, understanding that there's a decent chance that it stalls out at 37, but wanting the better risk reward. If you don't want to wait all the way till 37 because you're like, well, I could get this $5 cheaper right now, you could buy some in anticipation, but I wouldn't even recommend it today. I'd wait for this to sort of show a pattern that it's done selling, and I don't think we've seen enough yet. And so what I'd say is the best way to approach something like this is watch to see if we can get a reversal pattern here, with the expectation that if it fails, you can add a position at 26 or 27. And if it moves up, then you can always add later at a bullish position at 37. But just, I don't think it's ready yet. I think you need to see a lot more. If I were personally looking to trade this, I would probably just be waiting for a little bit lower and maybe better risk reward. But I can understand a name like this that's probably evaded you for like a year, and you've reached the point where you want to go ahead and finally take some shares at a discount. I can see where you'd want to try to get in, but I don't think it's ready yet. I think it still needs a little bit more time to really sort of stabilize. And at the very least, if you really want to get in as fast as possible, at least wait for this pattern to complete and make sure it doesn't resolve to the downside. If it resolves to the upside, then go ahead and get in, knowing that you're probably going to have to watch it stall out at 37, but with the expectation that it eventually breaks out and gets back above this channel, and that if it fails, you have room to add a little bit lower. And you can always do like what we were doing with Denise here, and take advantage of some call premium. So if you ended up buying it at 32, 33, you could end up selling some 38 calls to sort of take advantage of the likelihood that it stalls out as it comes up and challenges some of these trend lines up here. Okay. All right. So I hope that helps, James. All right. Okay. So another one here. So Ray, you're saying, well, Ray, we know your problem. It's that you don't listen to the advice that you're given. You break your rules all the time. You have to control yourself if you're ever going to make it as a trader. I think that's always going to be the issue here. I think you know this. All right, Mike, we're going to look at UNG in a minute. I do want to point out, Ray asked me, I'm pretty sure, Ray, this was you. You asked me about Tandem a while ago. And James kind of reminded me of this because he was asking for the same thing. Here's a name that I'm pretty sure it was Ray. Wanted to get in forever, and it never let him because it just continued. You'd have to chase it. You take a look at what it's done throughout the year, right? And massive rally, and it's finally reaching a point where it's sort of stabilizing into a base, right? So here's another same sort of scenario where we're looking at a name for the longest time, but it won't give you a good entry if you want to play the value game, if you want to buy a good support. And it's reached a point now where it's at a good level of support. Now, is it worth buying right now? Maybe, maybe not, right? Because it really hasn't stabilized yet, but we've got a nice little hammer going today, and if we get a nice candle tomorrow, then it could be worth taking for more aggressive buyers. Now, it's still within a triangle, which means that there's a good chance that a bounce here ultimately fails. But if someone is really aggressive, they could go ahead and try to buy in anticipation. If someone is not aggressive and they're cautious, then the same basic thinking that we just had with BZUN, which is either wait for it to be on the right side of the triangle or wait for it to come down to the next level of support and play it off of there. But here's one that this was a chart request from months ago, and we're like, well, wait for it to correct, wait for it to set up a base, and then we can look at it and see where it is. And it's setting up a base now. Now, ultimately, the base is still above where we were looking at it last time, but this is a much more likely area to go ahead and play this as a value play. Now, that being said, I do think there's still more time necessary on this because, again, it's still within a larger pattern that has not really resolved. So there's still work to be done here. But this was just one of those types of names that I think that we need to really sort of look at. And these are the kind of names, again, I think, James, you're on the right track. When you see a market like this, go back to all those names that you loved, that you're like, man, if only I could have gotten this at this price. And a lot of those names are starting to approach those prices that you wished you would have had months ago. So this is a good time. If you're not really finding a lot of good trades, build a watch list of names that you have a lot of confidence in that are approaching levels that you're happy with. Okay. All right, let's look at UNG real quick. Ray, you know where to find me. You always disappear. I can't help you if you walk away and don't take your advice or don't take your mentoring lessons. There's only so much I can do. All right, Mike. UNG. Time tried shorted today at 36. Wow. Okay. Wow. You tried to short. Obviously day trade. Yeah. Gas has gone insane. Almost like a mirror image of oil, right? Huge move. And now, granted, UNG is kind of a decaying instrument, right? So it's always going to go down. So I applaud your efforts at shorting it. That being said, at the moment, it is extremely strong. And I don't know. I mean, if you tried to short it, I imagine you tried to short here. I can't see any other potential short area other than maybe in the morning. And if that's the case, this could continue to roll over today. That judging by how strong it's been, it could always continue to make new highs. But if you were looking to short it or short it again, just watch this pattern. See if it breaks again. If it does, then we probably have a move down to the 20 period, which is maybe about a point away, and then maybe on a really ugly candle all the way back to 37. But I don't know if that's going to happen with how strong it's been. But I don't know. There was a few good shorts here. Like, not sure when you tried it. If you tried it short today, failed out at lunch. So I guess maybe you tried it now, right after it already broke down. And we'll see what happens here, whether it continues to roll through this. But there are some levels here. I can see this, and this is, I don't know. We'll see. But I will say this: like, that's a huge candle. I mean, granted, all our little trend lines are kind of in the way now. Let's go back and clear those. Yeah, that's a big candle. So, like, I mean, there is volatility there to be shorted, I guess. But yeah, I don't know. There were opportunities there. Okay, so earlier morning. Well, Ray, you know what? I think this is a conversation better had through email rather than to continue through here. But yeah, I think this is something we should just discuss through email. No problem, Mike. I mean, I don't know that I really helped much here, but there were some potential trades here. I'm not sure where you got in, but this is, UNG is one of those names that eventually decays, right? The contango. So I would keep looking at it as a short. Like, this is something. Try it again, whether it's today or whether it's the next few days or whether the next week. Keep an eye on it. There will be short trades here. Okay. Yeah, no, it's a crazy move so far in the daily, but in the long run, this thing will go down. All right, guys, that covers it for today. I want to thank you guys that attended. It was nice seeing some names in here that I haven't seen before or haven't seen in a while. I hope you guys got good value out of this. If you did, feel free to go ahead and visit the Patreon page, see if you find more ideas and more trading value. And if you ever have questions, you can always ask me on Twitter, or you could email me, or you could find us on the Stock Guy 22 Discord. I'm always willing to help out, and I'm always willing to help a trader that's having trouble. Have a good rest of this week, and we will meet again next Wednesday. Thank you, James. Glad to have you in. And you too, Denise. Good to see you as always. Let me get that, James. All right, let me know if you see that. I just responded to the question. I think those invites. Okay, yeah, those invites are good. They expire, so make sure you use it. If not, then I'd have to send a new one. Once you join the Discord, you're in permanently. But if you decide not to use that invite in the next day or two, it might expire. Okay. And then yeah, once you're in there, you'll see Frank and I. Frank talks a bit more in there than I do, but I'm usually around. If anyone ever has questions, they can always ask. Oh, nice. You just joined. All right. And Ray. All right, guys. So other than that, have a good rest of this week, and we'll meet again next Wednesday.